Good morning. My name is Steve Huntsberger. I'm the president of the Indian Valley Chamber of Commerce, and I am happy to welcome you to another one of our seminars. This one today is on beneficial ownership and small entity compliance. And I know that sounds really exciting, except it's also really, really important. I think this is one of those topics that has been flying under the radar, and we want to make sure that as many people know about this as possible. We're actually going to be recording this, so we'll put this on our YouTube channel. So if there's information that you want to refer back to, you can find it on the Indian Valley Chamber of Commerce YouTube channel. We'll also push this out to the rest of our members. And if there's anyone that you would like to share this program with, please feel free to do that directly from YouTube. We are really happy today to have with us attorneys Charlotte Huntsberger and Dorothy Week from the law firm of Landis Huntsberger, Gingrich & Week located in Souderton. And you did not come here to hear from me, so I'm going to stop talking and I'm going to turn it over to Charlotte and Dorothy. Thank you very much.
It might be a little more entertaining if we heard from you. This is not the most thrilling of topics, but it is important. So just a little bit about our firm. We're located in Souderton, Pennsylvania, and we have served this community for many years. One of the issues that we have been getting many questions about recently is this very topic. So it's good to have a place to have this information disseminated. Our offices focus on estate planning and estate administration. We do a lot of work with corporations and nonprofits, as well as contract work, little bit of litigation, landlord-tenant issues, those types of things. But what we like to say is we are a general practice firm, and if it is something that we do not specialize in, we can refer you to somebody who does. So that's a little bit about us.
Yes. So good morning or good afternoon almost. I'm Dorothy Week, and I will start off with an apology because we developed a little bit of a glitch with our camera, so we look like we're, broadcasting from the far side of the moon, and we do apologize for that. But thank you all for joining us today. As Charlotte mentioned, this is a topic, and Steve mentioned, this is a topic that you may have heard about. It's something that from the surface, it seems like it's pretty straightforward. But as you dig into it and we start to try and figure out who does this affect, who's responsible, what are the compliance requirements, it starts to become much more complex. And so that if you are a small entity or you work with small entities, it really will behoove all of us to spend some time thinking about who are the beneficial owners, who really controls these entities, because there are reporting requirements, and because this is the way it is, there's potential penalties and they can be significant. So we want to make sure that everybody has the information that they need. And so we're going to spend a little time digging into what the legislation is, what some of the key terms are, and then show you the website where all the reporting is done, and hope that you can walk away with a sense of this is a big issue and it's going to require some compliance for the duration is our assumption. All right. So do we want
to give a little background of the purpose and the
Yes.
big picture overview?
So the big picture overview, it is called the Corporate Transparency Act.
And we're going to share our screen
there we go.
here. Let me do that.
Yeah, bear with us.
Yeah.
Technological dinosaurs that we are.
We can do it. Okay.
All right.
Can everybody see that?
Thumbs up, wave.
Okay.
All right.
We'll assume you can.
All right. So if you, and everybody has this, or they can see it now. Yeah. Okay. The Corporate Transparency Act passed in 2021. The point of this legislation is that, us attorneys would tell you that the reason many people put together businesses, corporations, is to start erecting a barrier between you as a person and, this is now a entity that exists on its own, and so that it can be you were able to have some layer of invisibility there, so that somebody could look at the name of a corporation, the name of an LLC, and not necessarily know who's involved with it. So the government eventually figured out that that is a problem, because corporate structures, LLCs, eventually started leading illicit purposes, as the screen shows, meaning money laundering and things like that. So the intent of this legislation is to start to peel back some of the layers for the government's usage and monitoring, so that they know who's involved with these, so that if they start to detect patterns of illicit activity, then they are able to start.
Yeah, looking for more transparency is what the goal is behind this.
Yes.
And looking for patterns. So banks have kind of been required to do this for some time. The banks know your customer rules are what you might be familiar with. So when you set up an entity and you go to open a bank account, they want to get copies of your driver's license and know who has more than 25% control of the entity. That is similar to what this law is. The law was originally passed in December of 2020. It was vetoed by the then president, and then it was the Congress overrode that veto in January 2021. It's taken FinCEN a while to work through the regulations, and so it's not effective until January 1st, 2024. And so everybody's now scrambling to try to figure out what it is and how to comply with it. So there's some basic terms you need to know. You want to go over these?
So the key word, well, the FinCEN is the Financial Crimes Enforcement Network. It's part of the Treasury Department, but everybody has abbreviated that to FinCEN. So if you hear us say that, that's what that means. Key concepts are beneficial owners, and we will dig into some of these in more depth later on. Beneficial owner is an individual or entity who has a 25% or more ownership interest, or, key distinction, exercises substantial control over the company. Beneficial ownership information report, that's the report that shows all of that. Is
Right.
that what we filed?
Yes, what is filed. You got it.
And then the reporting companies are pretty much virtually every entity that's formed in the US, with some exceptions that we will go over later.
So the first screen here that I want you to, as you're thinking about your own business, you can walk through this analysis to determine whether or not you need to report. Number one, how were you created, in the US or elsewhere? And if you were created in the US, is it a corporation? If yes, then you're probably a domestic reporting company. Are you an LLC? If you are, then you're probably a domestic reporting company. Was the company created by filing a document with the Secretary of State or a court? So for example, partnerships, if it's a limited partnership or those types of things, anything that requires a filing of a registration with the Secretary of State would be required to go through to determine you may be a domestic reporting company. In this scenario, it's just as important to look at some of these deadlines. So we have the deadlines for you here. And we're going to talk a little bit more detail about what some of our recommendations are with regard to these deadlines. But in general, if you were formed prior to December 31st, 2023, then your deadline for reporting is January 1st, 2025.
For this year, your deadline for reporting for this year, right? Or is it annually?
No, this is for reporting. If you were formed before 2023, December 31st, then you have to report this year.
Got it.
Now, what I will tell you is please do not wait until December 31st or January 1st to do that reporting. I would just put it on your calendar to do it sometime between now and the end of the year. This year, if you are created this year in 2024, then you have to file this report 90 days after your initial filing. If you are created after January 1st, 2025, then going forward, it's within 30 days of the filing. So this year, they're giving you a little bit of extra time to file the reports. If you are creating a new entity, going forward, it's 30 days. Now, go ahead. What's the information that's required to be reported?
So, should we skip to the next?
Yeah,
one
let's
then?
go to the next one, because this gives more of the detail.
So, and you think about this, you'll see this when we go to the website, but there's two different, the reporting company has to do their legal name. If they have a trade name or a fictitious name, principal place of business, your jurisdiction, this is all stuff that you would have created on your filing with your Secretary of State. But where it becomes a little bit more detailed is on the beneficial owner and company applicant, because then we start getting into personal information. The full legal name of each beneficial owner, date of birth, your home address, does not have to be a US address, and a unique identifying number. The examples are on there, like a driver's license, so that would be your driver's license number. So that, again, it's more for tracking and identification purposes, because Pennsylvania PennDOT has a database of all
Right.
driver's licenses that are issued. Or the final is a FinCEN identifier, which will be discussed
Yeah.
later.
One additional note on those driver's license and passport, it's not just reporting the number as well. You do need to upload a photograph or a picture,
Copy of it.
a scanned image of that driver's license and passport. And so that's part of the process as well. Now, the other thing that I should back up and note is that this information that has to be reported, if there is changes to any of this information. Now, for driver's license or passport, it only requires changes to name, if you get your driver's license or passport renewed and the number stays the same, that doesn't need to be reported as a change. But if you are taking care of a scenario where you've gotten married and your name has changed, that would have to be reported within 30 days of that change. And we'll go through that in some more detail as well. So there's some key issues and definitions that we need to go over a little bit more in depth. One is, who exactly is a beneficial owner? And you might think that this is pretty straightforward and doesn't require a lot. Somebody who owns or controls not more than or not less than 25% of the ownership interests. The second, the first part of this is somebody who's exercises substantial control. And that's where this gets a little bit more interesting as to who might be defined as a beneficial owner. So what is direct or indirect control?
Here are some examples to think through. Board representation. Now, because when I think this statute first came out, people were thinking, oh, I'm just an owner of it. But now if you have an entity that has a board of directors, now we have the possibility that just serve a board representation, because if we do this correctly, the board is really what is controlling your corporation. Right. Now that could be enough that you now have reporting requirements on that. Ownership or control of a majority of voting rights, because remember, control can also be, doesn't have to be ownership. Rights associated with financing. So there are a lot of different ways that somebody can be pulled into reporting with this. And so just to be clear, Charlotte, we could have an entity that we have ownership reporting, somebody that might own 25%, but then we also have one or more people that could fall under this direct or indirect control.
Yes, yeah.
So that there could be multiple filings together with a single
Owner, yeah,
Yeah.
exactly. Just to think through what is substantial control. So you could have somebody who's a senior officer, a CFO. It maybe doesn't have any ownership interest in the company, but has substantial control over the business of the entity, and they could be deemed to be a beneficial owner. Think through this option, this situation with me. What about if there's an LLC where you have maybe two members, and then those members have decided to elect a manager who is not an owner, who is not a member of the LLC, but that manager is the one who does the day-to-day activities for the business. In my opinion, that person would be a beneficial owner, and you would have to report both of the owners if they have 50-50 interest, they're more than 25, and you'd have to report that manager for the LLC.
Right, because think about even just nature, scope, and attributes of a reporting company, including the sale, lease, mortgage, transfer of property. Managers sometimes can do that and not have to be an owner. So that, and then also, if you start to get into more complex formations, then you can have entities that have a managing entity, which is another LLC that controls these type of decision-making and authority, so that you start to get levels of complexity that.
Yeah. And the thing that I will refer everybody to, and we'll look at the website a little bit later, but FinCEN has been providing updates to their frequently asked questions on a weekly or more frequent basis. So they are continuing to provide additional guidance as to, how to define some of these issues, how to deal with some of these questions that come up. Think about it in terms of this. This is just kind of looking at what are the types of areas that would be considered substantial control, and who might be the people that fall into these categories.
And this is a little bit for like the lawyers among us, this is a little bit like a law school exam. But I mean, but this rubric here helps you think through. It's almost like issue spotting to say, okay, I have this entity who has authority.
Right.
I have this entity who are officers.
Right.
So it's just starting to provoke questions and thinking through on this.
Yeah. To make it even more entertaining, there's different ways of calculating ownership interest. And so, do you do it straight upon percentage of outstanding capital and profit interests? You could have shareholders of an entity who do not hold voting rights. But if they have 25% or more of the ownership of the entity, they could still be considered in that 25% ownership test. So you can go down a lot of rabbit holes when you're talking about this perspective. Another definitional phrase that you'll need to become familiar with is who is the company applicant. Now, you would think this is pretty straightforward, but again, it can get into issues as to who is actually required to report and who is reporting. So if there is somebody who is actually filing the documents with FinCEN, then that's a company applicant. If it is somebody who files a foreign entity, so if they've got a Delaware corporation and they've filed with Pennsylvania to be recognized as a foreign entity here in Pennsylvania, the person who's responsible for that filing is the one who is the company applicant. What if you have a scenario that you have an attorney that you work with, and the attorney is the one who's actually filing the documents for the entity, even though they are not in any way an owner or part of the company at all? Then that attorney would be the company applicant. So those are those are things you need to think about. If it is an entity that was formed prior to January 2024, then you're not required to have a company applicant for those old ones. It's a different kind of information that they're gathering. But for new entities that are being formed, then you can have up to 2 company applicants. The person who's actually filing, and then the person who in essence is representing the company. And this gives you a little bit more of that. I'm gonna jump ahead to
Because you can
this.
see the, yeah.
There's a kind of a summary here as to who might be these company applicants. And you have to realize that the information that's required to be provided for the company applicant is very similar to the beneficial owners. So you have to provide a copy of a driver's license or a passport, or the company applicant, any of these individuals who are needing to file could obtain a FinCEN number. And if they obtain the FinCEN number, then they just use that number for all of these filings. So
Again, just think, sorry to interrupt.
Yeah,
Think
that's
about
okay.
it this way. All of this is for transparency. So now, so that it is all in aid of transparency, so that there is now visibility of not only who the people are, but the people who are facilitating this. So, that's the point of this, that it makes it that much easier to start to track who is involved.
Right. This is, again, kind of just another flow chart that you can walk through to determine whether or not you have to provide a company applicant, and let you review that on your own. Now, one of the most important things to think about, we've talked a lot about what needs to be filed and kind of who's responsible for some of these filings, but let's talk about the exemptions. So there are entities out there who already have to comply with some of this know your customer reporting. So financial institutions, stockbrokers, insurance companies, they're already exempt. Nonprofits are exempt. If your entity has more than 20 people working for them and has gross revenues of 5 million or more in any single year, in a year, then you are also exempt. The interesting one here is that small businesses that are members of the National Small Business Association as of March 1st also are exempt. And that is because there was a case that was brought by the National Small Business Associations in the district court in Alabama, and they claimed that this law was overreaching, that it was unconstitutional, and the court sided with them and said, "You're right, it's unconstitutional." Now, the stay that is in place is limited to only applying to those companies who were members of this National Small Business Association.
And the court was very careful to make
Yes.
that clear.
Yes,
So they did not want this to be interpreted that it affected everybody.
Right.
So, and FinCEN made it clear that they then expect everybody to comply.
Right.
Other than,
yeah. FinCEN is appealing this, and so we don't know where this will go. And so I get many questions from clients who say, okay, well, I was created before January 1st, 2004. I know I've got to do this reporting by the end of the year. Should I do it now? I actually have been telling customers, wait till the fall. Let's just see what happens with this court case to determine whether or not it's going to be overturned, whether it's going to be upheld, whether it's going to apply only to the National Small Business Association members, or if it's going to be broader reaching. So we'll talk a little bit more at the end about what are the next steps for companies that are out there, but this is a rather interesting wrinkle in the process. Other associations that might not need to file because they fall under the exemptions are entities like general partnerships. When you create a general partnership, there's a partnership agreement. you may not file with the Secretary of State.
Right.
And to create that entity, you might, register a fictitious name, but you're not filing to create that entity with the Secretary of
And a
State.
fictitious name is not enough to require it.
Right.
Whereas if you are an entity that has a fictitious name, that's some of the information and identifiers that have to be part of this.
That's correct.
And it would also be like solo, like if you just have your own business.
Sole proprietors.
Sole
Yep.
proprietors.
Mhm.
Yeah, just think about it from a paperwork perspective. If you had to file paperwork to get started, then that at least raises the question of, I probably now have to file paperwork with FinCEN to comply with this.
Right. The other area that I think will apply to some people and is rather interesting, it came up in the frequently asked questions, but another exemption is if you have an inactive entity. And in order to qualify for this exemption, you have to meet all 6 of these criteria. So the entity was in existence on or before January 1st, 2020. It's not engaged in any active business. It's not owned by a foreign person. It hasn't experienced any membership or ownership changes in the last 12 months. It hasn't received any funds greater than 1,000 in the preceding 12 months. And it does not otherwise hold any other type of assets. So let me give you an example. I have an entity that I set up a number of years ago to hold real estate in another state. We've sold that real estate a while ago. It's just sitting there empty. We don't file income tax returns on it anymore because we distributed the assets out of the entity. It doesn't hold anything. That would fall under this inactive entity exemption, and I would not have to file with FinCEN the beneficial ownership information. Now, if I decide to purchase another property in that entity, or that inactive status changes and it becomes active, then within 30 days of that change, I need to file with FinCEN. Now, filing the report. There could be a number of people that actually are responsible and are authorized to go through these steps of filing with FinCEN. And so anybody who's authorized by the reporting company to act on its behalf, it could be an employee of the entity. It could be a law firm that you work with. But there's information then that needs to be filed also for that reporting person as well. But those are who can file the report. We are going to switch over to the actual website. And so bear with me a moment here while I switch over. This is the website where you go to file the beneficial ownership information. And there is a lot of good information in here. There's resources over here on the left-hand side that you can go into frequently asked questions. You can go into, summaries and guides that they have provided to you. And then this is.
Can't see the website.
Okay. Okay. Well, sorry. So it is fincen.gov/BOI. And I'm not sure why you can't see the website, but the link is here. Go to that link and you can get that information and you can go through. The filing can be done by either paper or online. The online is very easy, very straightforward if you have all the information in front of you.
Yeah, that was my point. I was going to say, just make sure you have everything, because once you get started, you have to be prepared to upload the photo identification and have all of the names and addresses, and you just want to have everything set, because
Right.
once it starts, you're going through pages of filing.
Oh, okay. Thanks, Joe. I missed that guidance on how to share the other screen, but we'll move on. The next section I want to talk about is how do you obtain these FinCEN identifiers? So if you have a situation where you work for a company and maybe the company has varying entities, and you're going to be filing the information for multiple entities, you may want to obtain a FinCEN identifier. And it's an application that's done on the same website where the beneficial ownership information is provided, and you have to provide some of the same information that you would need to provide otherwise. But what it does is it gives you a number, then an identifier that you can just put that in rather than uploading your driver's license or passport every single time you go to file a new entity.
It's probably very similar to anybody who works with the IRS. If you have a P10 or, you know, now you have a unique identifier so that the IRS knows who you are, same type of concept.
Right. So yeah, we went through some of that information. Let's talk about what happens if there is changes to that information. So the company, you know, let's say that there was a driver's license that was filed for the beneficial owner. And the address on that driver's license changed. You know, what happens if
Somebody moves?
Somebody moves, right, exactly. The timing of changes would be within 30 days after the change, or according to some of the additional guidance that has been provided, within 30 days after the individual becomes aware of the inaccuracy. So that has been updated as well, because the change may happen, but if the individual or entity isn't aware of that change, then they can't really provide that information. This is kind of a chart that helps you think through this information. So if the passport or driver's license number changes, yes, you need to update that. If the identifying number does not change, the passport numbers do not change, the driver's license doesn't change, then you don't have to update it. So this is one reason why some people are recommending use a driver's license instead of a passport, because passport numbers can change after they've expired and you get a new passport, but driver's licenses numbers don't if you're in the same state. Some other issues to think about is minor children. So if you have a minor who owns an interest, beneficial ownership interest in a company, once they reach the age of majority, now they need to report that information, giving their information rather than parents' information. If there is a change in the exempt status, that change has to be reported. So
there must be a form or a line in there
there is.
that you're electing exempt status.
Well, you don't have to report. If you are an exempt entity, you do not need to file anything.
Becoming exempt.
If they become exempt, then yes, exactly. Now, let's talk about what happens if you fail to comply with this. There's some significant penalties that have been put in place. And of course, the law is much too new for anybody to really be enforcing these penalties yet. I haven't heard of any enforcements that have happened.
No, I haven't seen any.
But if there is an entity that causes the failure and both the senior officers and the reporting company are responsible. So, for example, if you have a CEO that controls the entity, they're a senior officer, but maybe they don't have any ownership interest in the company. Well, both of them could be responsible. And the criminal penalties are up to $10,000 and 2 years in prison. Civil penalties up to $500 a day. And that continues for each day that it has not been fixed. So, that can add up fairly quickly.
And you realize, though, that this is your incentive for the self-reporting.
Mhm.
Because the government does not have the ability to track every single company that gets filed everywhere, but the potential penalty is really what can be $500 a day racks up incredibly quickly if it suddenly turns out you're 5 years behind.
Right.
Then you're in.
But there is some safe harbor things that you should be aware of. And so the safe harbor, as they're currently laid out, is there would be no penalties for any individual or entity that files a corrected report within 90 days when you first submitted your report. So if you first submitted your report and you realized later on that you forgot one of the beneficial owners, or there was somebody else who has substantial control that should have been included, as long as you corrected that within 90 days, you're fine. The final rules also extended this safe harbor so that if there is a situation where the
Filing requirement.
the filing requirements, there's been some sort of a filing requirement change, and you become aware of that, even if it's not within that 90-day window, as long as you file within 30 days of when you become aware of that change or the incorrect information, then that's also within the safe harbor. At the end of the day, we haven't seen how they're actually going to enforce this. And there's a lot of questions about how are you going
Precisely
to
that.
enforce this? How are you going to know? How is FinCEN going to know who the substantial controlling parties are? There's a lot of unknowns here, but this is where the rule stands at this point. And at the end of the day, I think the intention of FinCEN is to try to really go after the bad actors,
Right.
the money launderers, the shell corporations that are, trying to do illegal things.
But you can then see that the importance, of compliance. Not every small company has a compliance officer.
Right.
But as you start thinking about what are our annual requirements, and you can going into the next slide, as far as thinking about, are there things that we have to be proactive about?
And so these are some things that we're recommending companies take action on, that they think through. So, have you looked at your organizational documents recently? Do they need to be updated? Is there a registered address that needs to be changed so that you can get the notices?
Who are your officers?
Exactly.
Because sometimes officers don't get updated from the date that the entity was formed.
Right.
And, that needs to be. These are all the corporate actions that us lawyers are always yelling at you about, to say you have
right.
to update this and make sure that everything is accurate.
Right. So you as a company would need to collect all this information from your officers, shareholders, members, managers. You have to identify who's going to have this responsibility for this filing. And then because you're collecting some of this protected financial or protected information from these individuals, how are you going to protect that?
Mm-hmm.
So, if you're getting the driver's license, the passports from your officers, directors, shareholders, how do you then protect that information? Now, I want to take just a moment and go through, we'll have time for questions at the end, but I also want to make sure while we have all of your attention, there's also some annual reporting requirements. that are coming up that people should be aware of. These are based upon an act that was passed in 2022 for Pennsylvania. And it is a requirement that entities that have filed with the Pennsylvania Department of State, whether they're corporations, nonprofits, LLCs, LLPs, whatever, they have reporting that will need to be done ongoing every year. So up until this point, when you filed your entity documents with the state, the only time you really went back in there is if you needed to change something. So now with these reporting requirements, annual reports will need to be filed every year with the Pennsylvania Department of State. And this is completely separate and apart from the FinCEN reporting that is required. So beginning in beginning in 2025, if you were in existence December 31st, 2024, then the deadlines for filing for these different entities would be June 30th for corporations, September 30th for LLCs, and December 31st for any other associations. There is no cost for nonprofits, LPs, LLCs that might have a nonprofit purpose, but for business corporations or other for-profit entities, there's a small $7 filing fee. They are supposed to be providing you notice 2 months prior to these deadlines about this filing. But if your registered address for the company hasn't been updated, you know, who knows where those notices might be going. So this is something you should just be aware of as well. There's also consequences for failing to file this annual report. And these aren't going to start until 2027. But they could, in essence, dissolve your entity if you fail to file the annual report. So they can cancel registrations, dissolve an entity, and then, you know, if you're not following through with these reporting requirements, you could be stuck with a situation where you've had an entity created so that you can preserve the right to use that particular name. It's been canceled on you because you haven't filed. And then you have to go through and file information to reinstate. So that is something that you just need to be aware of, and how it might, the reinstatement will take care of the dissolution issue, but it doesn't restore the right to the exclusive use of the name.
So, and again, just to think about, you know, if you're an entity, every year, most people think about, oh, I've got all my tax reporting, and there's organized processes in place to deal with tax reporting. Now, think about it that this is now adding a second level of reporting, so that you haven't had to do this before. Now there is essentially corporate reporting, you know, regarding your structure on top of, so it's two different things, and making sure you have the processes in place to comply with all of this. And it can be a lot, and making sure you have the right person to do that, and that's able to stay organized and stay on top of all of that.
Right. If anybody has a question, I would encourage you to put that in the chat window so that we can go through those. This is our contact information as well, and you are welcome to reach out to us with questions about your individual entity or questions that you might have.
Let's see, how do we undo this?
Oh,
there we go.
So Steve, let's go through. Are there any questions that anybody might have?
And you can either pop them in the chat box, or you can unmute yourself and ask the question. Yes, I will send out the slides after this. Good question. There was a lot of material. How about related parties, husband and wife, each owning 20%, totaling 40%, is reporting required?
So if husband and wife own 20%, that's below the 25% threshold for ownership. The question is, what role do they play in the business? Because even if they only own 20% interest, if they have substantial control in the business, they may still be a reporting individual.
Any other questions? Limited partners, no control.
Limited partners, no control. So this would be one that would fall into those situations where if you are only a limited partner and you truly do not have any control, and your ownership interest as a limited partner is less than 25%, then you would not be an entity that would be considered a beneficial owner and have to report.
Bob Smurl said, see, reporting seems enough. Why would you want to avoid reporting?
And, that's a good issue. Yeah. It's a good question. The process is fairly straightforward. They have tried very hard to make the online process as simple as possible. The issue is you are providing to FinCEN your driver's license, your passport. You're providing to them information that you have an ownership interest in the company, right? Or control of the company. For most of us, we agree with you, Bob. We say, who cares? I don't care if you know that I own an interest in that company. It really is an attempt to go after the bad actors, those who are trying to hide things, those who are trying to create shell after shell so that, nobody can figure out who actually owns it.
But there are people that will say, well, no, I formed this so that I can have a degree of anonymity. And unfortunately, there's some loss of anonymity.
Yeah, and FinCEN has attempted to reassure everybody that they are holding this information securely and that it will not be accessible by any breach or issues. And there are limits to who can access this information. In essence, it would be very much, requiring courts or officers of the state to provide, a warrant to request the information.
You see the question there?
Yeah.
Real estate.
The question is, number one, real estate flipper who purchases property in a corporate name before incorporating the entity. Well, you're going to have to do a new deed for that property, a deed of correction if the corporation was not in existence when the deed was filed. So that's a problem number one. And number two, once the entity is created, that's when the filing requirement is in place. So number two, then an LLC formed to seek important employee status for green card purpose. Well, if 25% ownership of that LLC is, that would be considered a beneficial owner. And so it does not matter why the LLC was formed. If it's an LLC, you have to report the beneficial owners. Those are all good questions. And there are also available online at FinCEN's website. The frequently asked questions is a great source for trying to determine what, a particular scenario. They've got a lot of examples on there.
And of course, I'll include your contact information is in the slides, but I'll include that also in the email that I send out. we'll push this out to our other members, and you can share this attendees as well. Rebecca
Couple
has,
more questions came in. Company applicant. Yes, the question was, if I'm filling it out for my own LLC, is there some redundancy in filling out both the company applicant and the beneficial owner? Absolutely. So if you're filling this out for your own entity and you are the sole member of the entity, yes, you're inputting your information once as a company applicant and uploading your driver's license, and you're putting your information in again as a beneficial owner and uploading your driver's license. So yes, it is definitely a bit redundant there. The other question was, other than the results of the court case regarding Small Business Association, do you expect any changes that will impact the slides or the current frequently asked question? Yes, I will tell you, I've been getting reports. Well, this week, I seem to be getting reports almost daily. You can, on the FinCEN website, sign up for alerts when there are changes made to the frequently asked question.
Yeah, because for example, didn't you say that the 30-day safe harbor just came up in the last week?
Yeah, they continue
yeah,
to kind of respond to these questions and
It's all
provide
new.
provide more guidance. The whole issue of the exempt entities
Yes.
came up in the frequently asked questions. So yeah, I've been getting reports at least weekly, sometimes daily, as to other changes. So I will provide that caveat that when will the changes stop? Just
Yeah.
because I have no idea, but I expect to see them continue.
Well, and this is always the thought of, okay, the reporting is, seems simple, Bob, to your point, and straightforward from the beginning, but then as you start to deal with it practically, they
Mhm.
start to see things so yeah, changes will never stop. They'll look at the IRS regulations that are, 60 million pages long.
Right.
This is life in government regulation.
Right.
is it a situation where you want to put this off as long as possible, but you don't want to do this on December 31st?
For my existing clients, I have been telling them to wait till the fall to deal with it. Because if, for example, the appeal process starts moving more quickly than it currently has, and there's a decision by an upper court that definitively states whether or not an entity that was formed prior to December 31st, 2023 is required to do reporting. If we don't have to do the reporting, I don't want to.
But that's we need a appellate practitioner
Right.
to say, is it really just because it goes to the Sixth Circuit or whatever? Well, if somebody loses, they're going to the Supreme Court, so who knows?
Right. As long as you get it filed before December 31st, 2024, you'll be fine.
I mean, think about it. The question says, can you be more specific about the fall? Think about it this way. Remember when everybody has experienced websites being down. You
Right.
don't want to be the last person to file and the website is crashing because it's just not capable. So yeah, I'm starting to think for clients of September, let's
Yes.
start getting the documents together and then start moving.
Yeah, you don't want to wait until Christmas week and realize that you've got to get copies of all these driver's license and everybody's on vacation, right? So, the other piece of that is for new entities being created now, the lawsuit that is in the
Doesn't.
process does not change any of the requirements for new entities. So, if you're filing a new entity, you got to get on it and get that filed within 90 days this year. Going forward, it'll be 30, but right now you have 90 days.
And you can see, if any of you are practitioners that work with, sometimes small entities will be like, oh, I filed on my own because it's so simple. I can just go to the Department of State. Well, no, now there's a second level. And if they, just filing your form that costs $125 with the Department of State is not enough.
Right,
Now, and the state does have a link for it.
they
doesn't
do.
it?
They,
Just making sure that next step is taken, because now you only have the 30 days. to
90
do it.
days this year,
Oh,
30 days going
next year.
forward.
Yep.
But let me also give you one key is when you do file that beneficial ownership information, you'll get a transcript back of that filing. Make sure that you are printing that or saving that somewhere so that that is your proof that you have complied with the law.
Yep, I agree.
Any other, does it cost to file? No, there is no cost to file for the beneficial ownership information reporting. So it's similar to kind of the annual reporting, whereas the annual reporting, there's a minimal fee. For the beneficial ownership, there's no fee for that.
Time.
Just time in gathering the information. Any other questions that anybody might have? You're welcome. And the question about how are business owners being informed about this? Accountants have been trying to do a really good job of telling people as they're meeting to do their tax planning that they need to be aware of this. But I would say there hasn't been a great effort by FinCEN to reach out to all of the entities, and I'm not sure how they would do that. So this question comes into play then in terms of how will they enforce it?
Mhm.
How are they going to know if somebody hasn't filed? And certainly, I think that's going to be a challenge for them going forward. And I would imagine as the year goes along, FinCEN will try to do more to provide information to businesses.
Yeah, I mean, because you think about it, that's why they also built in a learning curve,
Right,
almost some
right.
time to, okay, you're not all like you have to have it done by January 5th. Now, this is the whole year. But you're right, they need to do more. And whether, I don't know, it'll be interesting to see whether Pennsylvania
Right.
does anything with it. Because Pennsylvania does have it on their website,
Mhm.
and that is also helpful.
Right.
It's also a good reminder that your local Chamber of Commerce is on top of these items and happy to make sure that we bring this information, curate it, and keep you all informed. So if you're not an Indian Valley Chamber of Commerce member, I would love to talk with you about it. But this is one of those things that's so important that I wanted everybody to know about it.
Yeah. Good point. Okay, if there's no other questions, I encourage you to reach out to us if you do have individual questions about your individual situation, and we can certainly try to help you through that. But I do appreciate everyone's time and thoughtful questions, and feel free to forward this information to those who might need it. And thank you to the Chamber for providing the opportunity to share this with you.
Thank you, Charlotte, Dorothy. This was really good information. I mean, it's a lot of information, and I think it's good to have it in a recorded form. You can go back and take a look at it. We'll have it in the slides. And again, yeah, please be sure to forward this out. I'll try to get the slides out next week, so don't be looking for them too soon, but we will get them to you. And again, thank you so much for sharing your expertise. And everyone, it was good to have you join us. And I hope you all enjoy the rest of the day, enjoy the sunshine, and have a great weekend. So we will see you all soon. Bye.
All right,
Thank you.
bye.